Welcome back to U.S. News Briefs. If you work 50 or 60 hours a week and rely on time-and-a-half overtime pay just to make ends meet, you already know how painful it is to watch the IRS take a massive bite out of your extra hard work. But what if I told you the government just made your overtime tax-free? Today, we are breaking down a groundbreaking new tax law that allows middle-class workers to deduct up to $25,000 in overtime pay directly from their federal income taxes. We are going to cover exactly who qualifies, the hidden state law trap, and how to find this missing money on your W-2. This massive change comes from the newly passed One Big Beautiful Bill Act, which went into effect for the 2025 and 2026 tax seasons. Inside this legislation is a provision officially called No Tax on Overtime. Here is the foundational rule. If you are an hourly, non-exempt employee who is required to be paid time and a half under the Federal Fair Labor Standards Act, often called the FLSA, you can now deduct the premium portion of that pay from your federal income taxes. But before you get too excited, you need to be aware of the state law trap. This federal deduction only applies to overtime earned after working 40 hours in a single work week. If you live in a state like California that requires daily overtime after 8 hours, or double time pay, those extra state-mandated premiums do not qualify for this specific federal tax break unless you also cross the 40-hour federal threshold. It strictly applies to the federal time-and-a-half standard. If your accountant hasn't warned you about these specific rules yet, hit that like button and subscribe to U.S. News Briefs right now. We do the heavy research so you can keep more of your hard-earned money and avoid an IRS audit. Let's clear up a major rumor right now. Not all of your overtime check is tax-free. The IRS rule states that only the half portion of your time-and-a-half pay qualifies. For example, if you normally make $20 an hour, your overtime rate is $30 an hour. The $20 base rate is still taxed normally, but that extra $10 premium is what you get to deduct. Single filers can deduct up to $12,500 of this premium pay per year, and married couples filing jointly can deduct a massive $25,000. Because this law was passed in the middle of the year, the IRS is not forcing employers to put this deduction on a separate line on your 2025 W-2. This means you might have to do the math yourself using your final pay stub. The IRS just released a special calculation hack for this. If your final pay stub just shows a lump sum for overtime, let's say it says $15,000 in total overtime paid, you simply divide that number by 3 to find your premium portion. In this case, you would legally claim a $5,000 deduction on your tax return. There are 2 final catches you must know before you file. First, you are legally banned from claiming this deduction if your tax filing status is married filing separately. You must file jointly to get the money. Second, this only exempts you from federal income tax. Your overtime pay will still be subject to standard payroll taxes, meaning Social Security and Medicare will still be withheld from your paycheck no matter what. Before you go, here is our question of the day. Do you regularly work more than 40 hours a week? And did you know about this new tax break? Let me know in the comments below. I read every single one. Thank you for watching, and I will see you in the next update.